Market outlook, week 38. With week 37, we closed out a market picture that sharply reflects the current imbalance of macro factors. Upstream prices fell in some cases quite markedly, while core inflation components in the end consumer basket remain sticky. This divergence explains impulsive reactions to data alongside brittle momentum. The sum of signals does not yet add up to a consistent, broadly accepted narrative. For digital assets, this is key, because macro currently leads micro. In event phases, capital rotates first into liquid core beta vehicles before diversifying selectively into higher beta segments. Bitcoin dominance sits around 55.6%, pointing to caution and a preference for liquidity. The fear and greed index is around 55, signaling a constructive but not euphoric backdrop. In practice, BTC and ETH absorb the macro impulse first, while altcoins follow once direction and liquidity conditions are clearer, or when project-specific catalysts amplify the flow. A brief condensation of the week in hindsight is sufficient. Disinflation in the upstream stages, sticky core components at the end of the chain, robust US labor market signals with only gradual cooling in wage momentum, a sober data backdrop in Europe without clear acceleration, mixed signals out of Asia with patchy stabilization in China. The result in crypto was a choppy structure in which positioning and liquidity steered price formation more than any news story did. Our outcome for week 37, plus 3.7% with half position size, achieved through a defensive order and risk architecture. More important than the number is the approach. Clear triggers, staged execution, stops, partial profit-taking, capital preservation over frequency. Looking ahead, the focus turns to week 38 and the main metronome of the week. On Tuesday, US retail sales provide a pulse check on consumption. The decisive day is Wednesday, 17th of September. The FOMC rate decision, projections for growth, inflation and the labor market, plus the press conference. What matters is the combination of decision, dot plot and tone. If the Federal Reserve sketches a clearly readable path uncertainty falls. Spreads and correlations stabilize and the willingness to increase beta in BTC's ETH rises. A tougher rhetoric with restrictive dots, by contrast, lifts risk aversion, supports dominance and dampens altcoin exposure. After that, the Bank of England and fresh US leading indicators come into play. The reaction in dominance and F&G serves us as a real-time filter. If dominance rises while F&G falls, we interpret that as risk aversion. Conversely, we increase any beta only gradually and with tighter risk limits. Operationally, we run at half-signal cadence until the Fed press conference with lean position sizes and defensive order placement around release windows. We prioritize pairs with deep liquidity, accept missed moves instead of chasing, and ladder entries along defined price zones. Stops track realized volatility and are stepped up once a setup confirms. Partial profit-taking secures progress. Our monitoring focuses on the yield curve, the dollar, implied volatility and funding. If uncertain correlations rise or spreads and slippage widen, our downshift schema triggers automatically. Reduce signal frequency, cut altcoin beta, lower net exposure, prioritize the exit path. Only once Fed communication points to a more plannable environment and the market reaction is coherent do we consider returning to 100% signal cadence. For implementation in week 38, we follow a clear playbook. We only initiate on confirmed triggers with robust exit paths. We do not lean against the immediate reaction in BTC dominance, funding and implied volatility, and we avoid forcing trades in thinned-out order books. Project events, such as larger token unlocks or mainnet milestones, are treated as amplifiers of existing macro impulses, not substitutes. If such a catalyst collides with thin liquidity, we handle gains strictly tactically. Our first principles remain: data first, then risk, then frequency. Bitcoin dominance around 55.6% and a fear and greed reading near 55 fit a phase in which quality and liquidity set the tempo. Beta is allocated selectively. and the range of plausible outcomes is wider than usual. Those who prioritize patience, discipline, and clean exits preserve room to maneuver for phases in which macro and micro pull in the same direction again. Finally, the brief note. This content is informational and not investment advice. Investment decisions should be made independently and with regard to individual circumstances. Quantum Data Analytics. Analytical, strategic, innovative.